from the studios of Farm Journal Broadcast.
Coming up on Ag Day, the president rolls out his budget and it includes new ideas on infrastructure, plus how many acres of cotton will go in this year. In agribusiness, the return of market volatility.
We're seeing some increased volatility, which I think overall for the farmer is a good thing.
Is there a veterinarian crisis on the horizon? We'll look at a new study on the dairy report and doggy dentist helping keep these canines clean.
Ag Day, brought to you by the Chevy Silverado, the most dependable, longest-lasting full-size pickups on the road.
Good morning, I'm Clinton Griffiths. It was a busy day in Washington Monday as the White House unveils its proposed budget for the country. And within that spending plan, President Trump releases his ideas on how to spend $1 trillion to improve the nation's highways, byways, and waterways. And he proposes a major shakeup to the food stamp program. Despite questions about funding, the Trump administration rolling out more details around his infrastructure plan, the president proposing a $1.5 trillion public works project. It calls for the federal government to spend $200 billion over the coming decade, and it encourages other levels of government and the private sector to raise their spending on infrastructure. Now, in addition to the spending, the Trump administration wants to reduce the amount of time to get the necessary environmental permits that often stymie projects. The plan also spending money on infrastructure related to rural America.
The problem the states have and local leaders have with funding the infrastructure is horrendous, and we will build, we will maintain, and the vast majority of Americans want to see us take care of our infrastructure.
The president says the $200 billion would come from cuts in other existing federal programs. Now to the president's budget proposal, which the title calls efficient, effective, and accountable. Well, just a proposal. It calls for cuts to core ag programs. The president proposing $1.8 trillion in cuts from mandatory spending programs over the next decade. At USDA, the president's budget requests a 16% decrease from those 2017 levels. It cuts crop insurance and other farm programs by $47 billion over 10 years. The budget reducing the premium subsidy on crop insurance from 62% down to 48%. And it caps insurance company underwriting gains at 12%. Now, the proposal would limit commodity conservation and crop insurance subsidies to producers with an adjusted gross income of $500,000 or less. The food stamp or SNAP side of the ledger, the president makes a major change. The White House proposes cutting $214 billion from that program over 10 years, and it calls for partially converting SNAP to a commodity distribution program, cutting cash payments and substituting them with 100% American-grown food, while also tightening work requirements. But getting SNAP changes approved in Congress has proven to be difficult.
I would caution my colleagues in both the House and Senate that it would be a very short-sighted decision to remove nutrition programs from the Farm Bill. I've been through conference committees on 3 farm bills in my time in Congress. We're able to pass a farm bill because we work together with people who have little interest in agricultural policy but care a lot about those nutrition programs. And if we undo that coalition, the chances of getting a farm bill completed begin to disappear. And I also would say that USDA has jurisdiction over nutrition programs, over SNAP, and consumers of agricultural products are how we earn a living.
The plan includes more than $90 a month in cash and a USDA food package, including shelf-stable milk, cereal, pasta, peanut butter, beans, canned fruits and vegetables, meat, poultry, or fish. Congress continued to work on language to correct a tax reform provision that could alter U.S. grain marketing patterns. It's known as 199A and favors co-ops over private grain sellers at tax time. Now, an agreement wasn't reached in time to make it into the 2-year budget deal. Senator John Thune says a solution is close. He says, quote, "We haven't gotten consensus within the stakeholder community on the language, but we have, I think, probably as good as we're going to get at a solution." After the recent return of market volatility, cotton markets reacting Monday to the National Cotton Council's 2018 acreage estimate. The annual survey of producers found farmers intend to plant 13.1 million acres of cotton this spring. That's up more than 3.5%. While most cotton states expect more acres, there are areas of note in North Carolina, The survey found an 8% increase as acreage moves away from soybeans. The largest decline reported in Mississippi with a 5.5% less cotton acreage in 2018. In Kansas, in wheat country, the NCC is reporting a 55% increase in cotton acreage and 21% higher in Oklahoma.
One of the reasons we see in terms of the potential increase is that while cotton prices have strengthened a little bit over this past year, competing crop prices have really remained fairly stable, so cotton has improved a bit relative to competing crops, and that seemed to be encouraging acres into cotton. I don't think this really surprised a lot of the participants at our annual meeting. We had seen other estimates in this range. I think right now the industry is just going to continue to watch what happens between now and planting time, particularly in terms of market and weather developments, because we know those are going to play a role.
Mike Hoffman joins us this morning for today's crop comments. Good morning, Mike.
Good morning, Clinton. Let's start off in Washington, Iowa. Mike Burdo says calving is in full swing. Calving began last Wednesday there. There's more than a foot of snow. Not ideal, but the sun is out today, which does help. And Paul over in South Georgia is sending us this picture of his two future farmers enjoying the cattle and the sunshine. Please be sure to bring some of that sunshine up to the Midwest, Paul. We could definitely use some of it. And taking a look at the wind speed forecast map, you can see not a lot of wind to start today, but we're going to get a little bit windier as the day goes on as we look at the far northern plains, a little bit through the southwest, northern Rockies. And then as we head into the day tomorrow, it's a much windier day, it seems like, especially from the Midwest into the western parts of the country. Eastern portions of the Rockies especially. It looks like a pretty windy afternoon. That's a look at the wind speed forecast. We'll have the rest of your forecast coming up, but first here are some hometown temps.
Save time each day and receive the latest market prices directly to your cell phone with market updates. It makes it effortless to stay aware of shifting market prices. Just text Markets 8 to 31313 to get started.
All right, up next, we'll look at a big run on soybeans Monday and talk about the return of volatility to commodity markets. And as a nation, we spend $60 billion a year on our pets, and that includes dental work. Details of Doggy Dental later on Ag Day. In agribusiness, let's find out why grain markets saw so much action Monday. For that, we turn to Virginia McGathey on the floor of the CME in Chicago. Virginia?
Today's soybeans, they gapped up. It seems that the weather worries in Argentina has heated up again, that some areas of Argentina did not get the rainfall that other areas did, and so there is some worries about some crop damage. Now we've hit these new highs, and $10 has now become the support as opposed to the resistance. If we can stay in this area and get some follow-through buying, we could definitely be off to the races. Corn was also on the rise. That weaker U.S. dollar index is really underpinning all the commodities, the futures across the board, and so that gave the market a lift. We're in an area that we haven't seen corn since early December. The U.S. dollar index also coming down definitely lets us become a little bit more competitive, and that's why part of wheat is rallying. Now, interesting thing about wheat is that drought concerns in those plains are really like driving that market higher, but there has been a real scramble of the short covering. Today, cattle rebounded. It seemed like the firm physical cattle prices really stopped that future slide, that 5-day slide that the live cattle was really moving lower. That's all from the floor at the CME Group. Here in Chicago, I'm Virginia McGathey.
Joe Vaklovic, Standard Grain, our guest here at the Agribusiness Desk today. Joe, as we look at these markets, we're starting to see trickles of volatility, especially into grains. We're seeing it in stocks. What's your take on that?
Well, we saw a massive, massive spike in volatility in the stock market early last week. We had a day where the Dow Jones was down 1,500 plus points.
Sure.
And that's something that we haven't seen in a long time. It had been months and years in some of these markets without that sort of volatility. So the volatility unwind, the unwind of this low volatility trade across financial markets is happening very, very quickly. It's more pronounced in the stock market, but I think we are starting to see it trickle into some of the commodities. Yeah. We've seen some wider daily trading ranges in things like crude oil, gold and silver, some of the energies certainly, and even in the grain markets. You know, we had a day there last week where the corn market was up almost 5 cents, and that's pretty rare these days.
Right, it is.
And the bean market had a day where we were up 15 to 20. So we're seeing some increased volatility, which I think overall for the farmer is a good thing.
Yeah, I was going to ask you, is that a good thing or a bad thing to see more volatility?
I think it's a great thing, because think about what we're coming out of here. We're coming out of a period of extended low volatility where the corn market did nothing. We traded at $3.50 for months and months and months,
right.
And then the December contract expired, and then the March contract traded at $3.50 for 2 months. So, yeah, it's welcome. We need volatility to offer the farmer marketing opportunities. We're seeing it in the wheat market right now.
Sure.
With this drought scare, or crop scare, whatever you want to call it, a lot of volatility there, highest prices in several months. So I'm hoping that this volatility continues.
All right, well, we'll keep an eye on it. Thank you, Joe. Appreciate that. We'll be back with more Ag Day in just a couple of minutes.
For more information about Standard Grain and its services, call Joe at 312-462-4438.
Welcome back to Ag Day. We're meteorologist Mike Hoffman. Mike, as we look at this system in the Southwest, we've been talking about this and pulling some moisture into that part of the country. How's it looking so far?
Yeah, the storm doesn't look real impressive to me, but it is definitely going to pull some moisture into the Southwest over the next 3 or 4 days. And that's definitely good news for those drought areas in the Four Corner region. Now, obviously, you're going to need a lot more than one storm system, but nonetheless, anything begins to help the process. Also, a stationary front in the southeast. A little bit of moisture still in the southern Appalachians kind of lingering, and a weak little system moving through Oklahoma and Texas, just with some clouds as we head through the day today. You can see the storm system is not exactly pumping in a lot of moisture out in the Southwest, unfortunately, but it will, especially in the afternoons as we head through time, see a little bit more moisture coming in. You can see this weak system moving through the southern plains, moves into the Tennessee Valley with a little bit of rain there. Cold front getting ready to cross the Canadian border with some snow in the far northern plains. Otherwise, it's kind of a lull in the storm systems that we were seeing for a while there across the northern plains and the Great Lakes. Just not a whole lot going on as we start this week and head into the middle of the week as well. Taking a look at the precipitation estimate over the past 24 hours, a little bit in the southeast, some in the southern and central Rockies. Adding in the next 36 hours, you can see our model doesn't add a lot in the Southwest, unfortunately, but still we're in a pattern where we could see more of that over time over the next couple of weeks, and we add a little bit more in the Southwest, or Southeast and the Northwest, I should say. Snowfall estimates, most of it has been in the central portions of the Rockies, especially Colorado, and adding in the next 36 hours, we're going to add more and more snow up to the northern portions of the Rockies, western Montana, northern Idaho, and that will kind of spread southward. High temperatures this afternoon, not too bad. 50s, 40s as you head through the plain states, even 20s up by the Canadian border. Not bad for this time of the year. Low temperatures tonight going to be in the 20s across the northern plains with a few teens. 40s Ohio Valley, 60s by the time you get toward the Gulf Coast, and high temperatures tomorrow afternoon, 60s and 70s through the southern tier states, and 30s and 40s through the growing country, the Midwest. I'll tell you what, those are decent numbers for the middle of February, and that's all because the jet stream has gotten rid of the trough in the east. It's gone to that cutoff low in the southwest. We do see the trough dig some cold air again into the northern tier of states over time, but our model keeps wanting to go back to that low in the southwest, and so that'll keep mild weather over the southeastern parts of the country and big changes over the west. That's a look across the country. Now let's take a look at some local forecasts. First of all, Lakeview, Oregon, good deal of sunshine and milder today, high of 45 degrees. Abilene, Texas, mostly cloudy and rather cool with a high of 51. And Rock Island, Illinois, a mixture of sunshine and clouds, high around 32.
All right, we'll turn our attention to the dairy market after the break with this week's Dairy Report. And later, taking a bite out of tooth decay in our pets as we head in the country.
Your next piece of equipment is on MachineryPete.com. Search equipment from dealerships across the country to find what you're looking for. Only on MachineryPete.com.
In our Dairy Report, the Senate starting immigration reform debate this week as farm groups look for changes to the H-2A program that would allow year-round workers. Currently, the Republican proposal grants 1.8 million Dreamers a path to citizenship in return for a $25 billion border wall trust fund and changes to the legal immigration system. Democrats are planning their own proposal. Washington watchers expect significant movement by the end of the week. Last week's budget compromise came with changes to the margin protection program. Changes in the package would shift the calculation of the actual dairy production margin to monthly as opposed to a consecutive 2-month period. USDA is also set to extend the election period for calendar year 2018. That would include those who had already elected to participate in the program before the budget bill became law. Meanwhile, Canadian Prime Minister spending last week in the United States. He says there is a clear path forward on NAFTA. Minister Justin Trudeau capping a U.S. tour Saturday in Los Angeles. He also identified several tough issues, including Chapter 11 investor-state dispute panels, U.S. proposals for the auto sector, and a U.S. demand for a sunset clause. Now, on the dairy side of things, a new report says U.S. dairy is heavily subsidized. Dairy Farmers of Canada releasing their report that says 73% of the returns received by U.S. dairy farmers in 2015 were a result of farm subsidies, such as the Margin Protection Program, the Supplemental Nutrition Assistance Program, and others. Meanwhile, U.S. farmers have complained about supports from Canada's quota system. We've reported for several years about the shortage of large animal veterinarians in this country, and a new study indicates the problem won't be getting better, and that's due in large part to stress on the job. Merck Animal Health, along with the American Veterinary Medical Society, conducting an in-depth survey of vets. It found that 1 out of 20 veterinarians suffer from psychological stress. That's in line with the rest of the population, but when you look at younger vets, it gets much worse. 83% reported anxiety, and only a quarter would suggest to friends or family to get into this line of work. High student debt was the top concern of these young doctors. Most graduate with more than $138,000 in debt. Still to come, when chew toys aren't enough for your canines.
I'm Charles Denny. We love our pets and do everything we can to keep them healthy, but that should include healthy teeth and gums. That story coming up on AgDay.
AgDay, brought to you by Liberty Herbicide, the simply better solution for superior weed control and a stronger yield. In the Country, sponsored by Kubota. Tractors, hay tools, utility vehicles, mowers, and more. Visit KubotaUSA.com today.
Pet owners often do everything possible to protect their animals' health, and that includes teeth and gums on vet visits. In this report provided by the UT Institute of Agriculture, Charles Denny has more on how UT vet students provide doggy dental.
Our patient is an 8-year-old boxer named Isabella. But this is no ordinary vet checkup. Isabella is here for dental work. The dog has overgrown gums and a cyst in her mouth. Isabella's owners discovered this on a recent vet visit.
Of course, once you know there's an issue in the mouth, as an owner, you become a little bit consumed with the behavior as it relates to eating, and so I have noticed that there's just not enough room in her mouth for her tongue.
At the UT College of Veterinary Medicine, they do procedures like root canals, tooth restorations, and oral surgeries. Overgrown gums, like in Isabella's case, can lead to bacteria growth, which can get into an animal's bloodstream and affect other parts of the body. February is National Pet Dental Health Month. Leaders here at UT-CVM say you should have your pet's teeth checked at least once a year, more often if your pet is older or a smaller breed of dog.
Yes, it is. So the statistic is that about 80% of dogs and about 70% of cats have some form of dental disease by age 3.
Tiffany Hunt is a dental and oral surgeon technician at UT-CVM and took x-rays of Isabella, performed a biopsy on the mass, and later cleaned her teeth. Hunt encourages owners to brush their pets' teeth and watch for things like loss of appetite and bad breath. Proper nutrition is also important for a healthy mouth.
It used to be a thing saying that you need to feed them dry food because canned food can lead to dental disease. That's kind of more of a myth we've learned over time. Now, dry food is nice because they do get that crunchy texture and mechanical. So what can happen is just their teeth can get loose and the gums recede, same thing as like in humans where we can get bad teeth and then they get loose and then they can get bacteria and infection, and so then they need to be extracted.
Unfortunately, that was the case with Isabella, who later had 3 teeth pulled. But her problems were caught early and her future encouraging. Your pet can have the same outlook as long as we make dental care a priority when it comes to overall health. This is Charles Denny reporting.
Thanks, Charles. And by the way, the Bureau of Labor Statistics says Americans spend about $60 billion on their pets each year. About a quarter of that is on vet care. About $25 billion is spent on pet food. That's all the time we have this morning. We're sure glad you tuned in. Spend part of your day with us. For Mike Hoffman and all of us here at AgDay, I'm Clinton Griffiths. Have a great day.
AgDay, brought to you by Ram Commercial, America's longest lasting heavy-duty pickups.